$76,000. That is the level traders fear, and one analyst says Bitcoin may test it soon. Right now, Bitcoin is holding a crucial technical zone, but that zone is weakening, and the market knows it. Analyst Don Crypto Trades points to the 0.382 Fibonacci retracement, sitting slightly above $84,000. He explains that this level has repeatedly acted as a defining support and resistance zone during past market cycles. His message is clear: bulls must defend this area. If they fail, the next target lies near $76,000. Falling through that region would erase the final meaningful support before a retest of the April lows. Such a move would also threaten the broader market structure on high time frames. The market already received a warning. On December 7th, leverage was flushed out violently. Bitcoin briefly fell below $88,000 before rebounding above $91,500. Analyst Bull Theory called the event another example of weekend price manipulation driven by low liquidity. Positions were liquidated on both sides, long and short, as the market whipsawed within minutes. Now traders turn their attention to the Federal Reserve. The coming FOMC meeting will determine the next move for interest rates. Many participants expect a rate cut of 0.25%. According to futures data, the probability is near 90%. But expectations do not guarantee relief. Marcus Thielen from 10x Research reminds investors that Jerome Powell recently emphasized a nonlinear and data-dependent approach to monetary easing, not a simple and predictable rate-cutting cycle. Thielen believes the tone after the meeting may become more cautious. He compares the current setup to the hawkish shift earlier this autumn. That shift kept market sentiment restrained for weeks. With trading volumes already weak and outflows from exchange-traded funds continuing, bullish momentum remains fragile. Thielen notes that risks of decline now outweigh the potential for near-term upside, especially as implied volatility keeps compressing. Henrik Anderson from Apollo Capital offers a similar perspective. He argues that the expected rate cut is already priced in. What truly matters is how the central bank describes economic conditions and future projections. He maintains mild optimism, saying that leadership changes at the Commission next May could pave the way for additional cuts in 2026. That scenario would support risk assets, including cryptocurrencies. Nick Rack from LVRG Research adds that employment and inflation data may soon play a significant role. If upcoming numbers align with expectations for continued monetary easing, liquidity could return to the market. That added liquidity would help rebuild confidence after recent bouts of volatility. For Bitcoin, the path remains narrow. Price needs to hold the zone above $84,000 to maintain bullish structure. A clean break below would open the door to $76,000 and signal that the cycle may be losing strength. Traders understand the stakes. Support and resistance define every phase of a market. When support breaks, psychology shifts quickly. What does this mean for investors? It means caution, it means discipline, and it means paying attention to global monetary conditions just as much as chart patterns. Bitcoin's reaction to the coming FOMC decision may define the rest of the year's trajectory. A supportive policy tone could stabilize price. A cautious one could accelerate downside pressure. Whether the next move is a bounce or a breakdown, the market is approaching a decisive moment. This has been BlockBrief. Stay informed, stay ahead.